Well, it would appear, based on the figures from the last quarter of 2019, that in certain parts of Australia we're seeing double-digit property growth. Whether that pace will continue, I guess we'll find out as the year goes on. Simon Pressley from Propertyology has put together the figures based on that quarter's results and then annualised that out for 2020. He joins me to talk through the results of that. Simon, thanks again for your time.
Always good to chat, Kevin. Thanks for having me back.
Yeah, interesting this. We'll go through state by state, but the first graphic we want to show is, I guess in a way this just demonstrates how much of a rough road we've had over the last couple of years. This, I understand, Simon, is looking at the number of transactions?
Correct. Looking at Australia as a whole, looking at total volume of properties that have changed hands going back since the start of 2016. You can see that for several years they're a fairly consistent volume. Once it was announced a change of Prime Minister, it was then, I guess, accepted by most people that would mean a federal election loss and also losing negative gearing and capital gains tax. And you can see that cliff, really, of transaction volumes there. But we have seen in the second half of 2019 an increase in transaction volumes, and would expect that trend to continue.
Just staying with that graph for a moment, I noticed there that you're attributing the negative gearing threat as that rapid decline in transactions. That would obviously reflect the concern by property investors, but that seems to be turning around now, Simon?
Investors are turning in very slowly, Kevin. The market activity that we've seen since about September last year through to the end of January, it's really been driven by owner-occupiers. The month of January is the first time there's been an increase in investor credit growth, the first time for quite some time. So general owner-occupiers and particularly first home buyers.
Yeah, the first home buyers grant scheme that the federal government have brought out that started at the start of January is obviously going to have some impact, but it seemed to gather pace even before it came into force, Simon.
Yeah, agree entirely. And I think interest rate cuts are the contributing factor to that. Not every first home buyer is going to get take advantage of this new federal government scheme. There's a limited number of applications that the scheme will support there, but that doesn't mean that a first home buyer won't transact. And we've got all-time record low interest rates. People are, and rightly so, are taking advantage of it.
Okay, well, let's go state by state. We'll firstly have a look at New South Wales, bearing in mind, once again, these figures are projected based on the results and the activity that we saw in the last quarter of 2019. Take us through New South Wales firstly, Simon.
Yeah, so to explain to the viewers there, these are all New South Wales locations in this graphic. The darker green are outside of Sydney, the light green are different parts of Sydney itself. But you can see on the left-hand margin there, that's the rate of growth annualised. So how we've taken that is the last 3 months of 2019 multiplied it by 4. Large parts of the state, certainly well in excess of 10%. And if you look at Parramatta, if we annualised out its last quarter, we're talking 70%. Now, I don't think that's going to happen over a 12-month period, Kevin. But when you look at a body of evidence across the entire state of New South Wales, it's fair to say that the real estate market is really cranking up, and it's not just in New South Wales.
Well, further evidence of that as we go to our next slide, which is out of Queensland. Once again, the colour coding is the same.
Yeah, colour coding, yes. The dark green is outside of Brisbane itself. We'll look at the light green first. Greater Brisbane is made up of 5 local government authorities, Brisbane City, Ipswich, Logan, Moreton Bay and Redland. Some mild growth, roughly between that 4 and 8%. Nothing wrong with that if we've got 8% growth in 2020 in Brisbane. But it's outside of the capital, regional Queensland, where there is stronger growth. Pleased to see Gladstone for the first time in probably 5 or 6 years producing some really good numbers, as is Mackay.
Yeah, Gladstone, you'd have to say that's off the back end of a pretty rugged run. But whether, as you said in that previous slide, whether or not that continues for the rest of the year, I guess only time will tell.
Absolutely. Yep.
Okay, well, let's move to our next one, which is Tasmania. I know this must be near and dear to your heart.
Yes, we've been very active in Tassie for a few years there. Again, the light green is the municipalities or local government authorities of Greater Hobart. And it's, as we forecast about 18 months ago, there's still plenty of growth left in Hobart's tank. It's running at about 10% pace at the moment. But outside of the state's capital, Launceston and Burnie, also locations that over the years Propertyology's invested in, and they're about 15-20% pace and had a really strong 2019.
Okay, Western Australia now is one state that's had a really rough road and probably still hasn't come out of it yet, a bit like Northern Territory, but let's bring this slide up for Western Australia.
Yeah, Western Australia has hurt a lot of people for several years, sadly, but again, if what happened in the last quarter of 2019 can continue throughout the year, Western Australians are going to be happy by the end of this year. Light green, different samples of Perth, showing mild growth, very similar to Brisbane. But the key thing is it's above the line for the first time. It's above neutral for the first time in several years. Karratha has been one of the strongest markets in all of Australia for about 18 months now. Not just from a capital growth, but its rental yields are ridiculously high. Obviously a volatile market, but very strong.
Okay, well, we'll go to Victoria now, and a totally different story here. Boy, I tell you what, we're not seeing the sort of growth that we saw in the Sydney graphic, but still represents tremendous growth, particularly in some of those city areas.
Yes, yeah. It's more the expensive parts of Melbourne, as with Sydney. The momentum started in late 2019 is at the higher ends, the luxury market. In Melbourne, it's sort of the $1.5 million plus suburbs. And then in regional Victoria, Ballarat just above zero, but let's bear in mind Ballarat's had a strong last 3 years. Bendigo's now cranking up. Geelong is growing, or had some growth, but I think it's towards the end of its cycle. Mildura's been strong for a couple of years now, and it looks like Warrnambool is just starting a growth cycle.
Yeah. Interesting. Now to South Australia. This is a state that I want to watch very closely because I think there is a lot of upside to come in South Australia. I don't know if you share that view, Simon.
Very similar to Queensland.
That's exactly right.
Yep. Pretty much mirrors it the last decade. For the same reason, an underwhelming economy, but balanced supply and affordable housing. So if the economic conditions can improve, places like Adelaide and Brisbane have a good future. We are seeing some positive growth in Adelaide, but it's quite patchy, as you can see there. The light green colours. There's a few local governments there that are just above the zero, but Norwood and Holdfast Bay. Holdfast Bay is the beautiful Glenelg, the Bayside suburb there. They're double-digit pace at the moment. Barossa and Adelaide Hills, although parts of those locations got hit by bushfires, sadly, but they're in positive territory. And Whyalla, we're quite bullish about Whyalla. It's already shown some good growth.
Yeah, and a good industry in Whyalla supporting that too. Wherever you've got good industry with and good employment prospects, you're probably going to see that sort of market that we're seeing in Whyalla.
Absolutely, and a good quality 3-bedroom house for about $250,000. It's hard to go wrong there, isn't it?
Can't beat that. Sounds pretty good to me. Hey Simon, always a great insight. Thank you so much. I really enjoy my time with you, and particularly the graphics, because it really tells the picture and shows the story quite nicely. So just to wrap, where do you think we're going to be this time next year? Do you think those predictions of 50% growth are going to continue?
Well, I think what everyone needs to keep in mind, Kevin, is whilst buyer activity is strong, there's a lot of confidence, interest rate driven, credit available, the number of properties listed for sale right throughout Australia is low, and that won't remain low forever. The vendors, the people who own these properties, are progressively getting organised and putting their property on the market. So as 2020 unfolds, where we'll see more listings, the rate of growth will reduce. But I still think 2020 is going to be a very strong year right across Australia. We
talked there about number of listings. Well, I'm getting reports from various markets around Australia about properties now getting multiple offers. I heard of one yesterday a property in a very affordable area, right in the median price in Brisbane, with actually 6 offers, 6 written offers. So I think that stock situation, while it's tight like that, it's always going to create lots of demand.
Yeah, and we're seeing it firsthand. It's not just in the data. Our buyers agents are active in 4 different states at the moment, and it's very often that properties that we're making an offer on, we're missing out on some because someone more emotionally attached to it wants to pay more than we're prepared to. But it's a good sign because it has been a pretty lean couple of years in Australian real estate, but a good year in 2020.
Wonderful stuff. Simon Pressley from Propertyology. Thank you very much for your time, Simon, and we'll catch you again soon.
My pleasure. See you, Kevin.